4 years after the financial crisis of 2008, and the world's economy is struggling to grow. Unemployment in advanced countries remains high, and a 3-year-old debt crisis in Europe continues to weigh on financial markets. On Monday, IMF economic counselor Olivier Blanchard scaled back the institution's global growth forecast from 4.1% to 3.9% next year.
It is pessimistic. I think you have still to put it in context, which is the recovery continues. But yes, it is weak. And then in terms of revisions since April, there are small revisions downwards. So it's not the end of the world, but clearly that's not a very strong recovery.
And frustratingly slow, says Federal Reserve Bank Chairman Ben Bernanke. He told the Congressional Committee on Tuesday that after a brief growth spurt earlier this year, U.S. hiring has slowed sharply, along with economic activity.
In part, slowing growth in production and capital investment appears to reflect economic stresses in Europe, which together with some cooling in the economies of other trading partners, is restraining demand for U.S. exports.
Economists say prospects for a global recession have increased. That's partly due to growing insecurity in emerging economies such as China, Brazil, and India, says economist Srinivas Thiruvadantai.
The last decade, especially up to 2008, they enjoyed these booming trade surpluses with the developed economies, the US and Europe. And that's gone away now because both US and Europe are in a long-term malaise, and that is causing their trade deficit to shrink.
But barring a collapse of the Eurozone or a fiscal crisis in the U.S., if Congress fails to deal with deadlines for cutting the deficit and avoiding tax increases, Standard & Poor's chief market strategist Sam Stovall sees the recovery continuing.
China is likely to see economic growth that comes in the high 7%, low 8% area as compared with low 9% last year. And the U.S. is probably only likely to see about 2% growth for all of 2012. So still at best a half-speed recovery, but it's still a recovery.
Despite a commitment to take further steps to stimulate the U.S. economy, Central Bank Chairman Bernanke offered no clues about what actions the Fed might take. Some market watchers think the Fed may act after its next meeting at the end of July. Mil Arcega, VOA News, Washington.